Hi there, it's Bill with Smart Trades, and it's Monday, November 22nd, a little after 11 a.m. Pacific time. And first of all, I'd like to start off with S&P Futures E-mini chart that I posted on Friday in my newsletter. And um, in this count, um, we actually made a new high back on, I believe it was the 8th, which was not made in the cash. This is important because it somewhat changes the count. This obviously is a close-only chart using 120-minute data. One of the things, there's no particular rule as to when to use close-only data. I think it is helpful, particularly when you're viewing 24-hour markets like the E-mini, and also if there's a lot of noise in the count. I don't know that this is the right count, but at any rate, it does sort of make some sense of the recent decline, and at least gives us a bearish interpretation. That's a bit of a red flag that we're looking for a bearish interpretation, but be that as it may, this count, so far is working out. So we'll see how it goes. At any rate, obviously you can see the 5 waves down. There's even a nice internal 5-wave structure within the 3rd wave, and here's your 4th wave resistance, which I identified on Friday. And here's how it played out. The futures went right up and just slightly beyond that 1205 area, which was the previous 4th wave resistance, and they fell off a bit of a cliff there, and so far have hung on. You'll notice the volume is not particularly spectacular off of that decline. So, but this is one possible scenario, obviously, that we've peaked and that we've put in an ABC rally that failed right at previous 4th wave resistance, and that the market's going down. I think the important thing here is to watch how the next rally plays out to see if this count is indeed confirmed. Here's the cash, similar but not the same. Here's that 5th wave, which on the cash was actually a failure, and you can count this as also a 5-wave or impulsive structure to the downside. However, we obviously on the cash have not actually gone back up to that 1205. Actually, the target's around 1207 for the cash, slightly higher. Note that we actually had pretty good breadth on the recent rally labeled A, and a little more on that later. Here's an alternate, more bullish count, and this is the S&P cash. Again, here's our 5th wave failure, and from there counting down A, B, and then an expanding triangle. I think I did mention this in the last video, and basically terminating right at previous 4th wave support, which is oftentimes the case, in particular if you've got a corrective decline. So the fact that we're holding there so far is potentially bullish. Obviously, it's got to continue to hold there. Additionally, you can count this decline off of the highs from last week as a ABC decline. Here we are on the futures, again, that same count. A down, B back up, expanding triangle, C wave, and from there you can see, again, the count is different here on the futures because we rallied overnight, and you can see a possible impulse wave to the upside. Or you could also count this as an irregular ABC. At any rate, it is interesting that we're hanging on right at that channel that connects the top of B, the top of 2, and the top of 4. That's now the bottom of this pattern here, which again is open for discussion as to what it is exactly, but we shall see. Here's Google. Now, whereas the S&P is very much open to interpretation, Google's chart is just a textbook Elliott wave, 5 waves down. 1 down, 2 back up, and then you can even see the 5-wave structure within 3, wave 4 back up, and a 5th wave down, which you can label as perhaps wave 1. From there, I think this best labels as A back up, B back down. Previous 4th wave resistance comes in around 605. I think how Google behaves here over the next several days is very important. Ideally, in the bearish case, it's going to roll over from that 605 area, give or take a point or two. If it were to rally back through this previous ledge, that would be a bit of a red flag for the bears and would be potentially bullish. There's nothing cut in stone about that, but let's just call a rally above 615 bullish for the market, and if we don't, roll over almost instantly from those levels, I think that it probably indicates that this decline actually was a C wave and that new highs are coming up. The Nasdaq is interesting as well. It also counts possibly as that ABC down with a slightly expanding C wave. Also of note here is that the Nasdaq breadth ratios actually made a new high on this last rally. As you know, I feel that breadth tends to lead the market. So the fact that we've already made a new high in breadth tends to be potentially bullish and indicates that there's a pretty good chance that the Nasdaq is at least going to retest the old highs around 2200 and possibly make a new high. We'll have to watch how it plays out, but that's certainly a possibility. Here's the euro. Again, we've got that I had labeled the 138 area as previous fourth wave resistance there. We failed right in that zone. And here's that larger picture. So far, we are still holding that channel to the upside. So it's not out of the question here that this was a corrective decline and that we're going to make new highs. But in the short term, let's just go back a bit. If we keep seeing impulses to the downside, clearly that is bearish. And if this high today, up around 137.85, and or the 138 level, which is the previous fourth wave, if that continues to cap this market, I think that's bearish, and that's probably going to help lead stocks down as well. On that note, gold, difficult to count. You can count this as an impulse down complete and a corrective rally back up. But overall, I think the pattern is impulsive to the downside and corrective to the upside. So I favor that the top is in gold, and it's probably a sell on these weak rallies. But again, one step at a time. And crude oil, also not a perfectly clean impulse to the downside, but clearly more impulsive to the downside and corrective to the upside, indicating a probable top in crude. The right strategy there would be to look for corrective rallies to sell into. And the fact that crude, gold, and the euro all look relatively bearish is probably bearish for the stock market as well, as long as these patterns persist. At any rate, thank you so much for watching. If I don't talk to you again, have a great holiday and a great week ahead. Thanks. Bye-bye.